Welcome to Trading Lounge and the Australian report, and starting on the weekly chart here, and let's just go through this a little bit. So we're looking at wave 4 here of primary degree. We're looking for wave 5 up here of primary degree, and we're also looking for 5 waves within that 5th primary degree structure here. So we're looking at 1 and 2 here, and then all the way up for the 3rd wave here, and then the 4th wave here, and then the 5th wave here. So from 3 to 4 here, we're looking at a 38.2% retracement level for this wave 4, or we're looking for this wave 4 to pull back to the wave 4 of 1 lesser degree. Now, it's already done that. It's pulled back to this support here of the 38.2% and the 4th wave of 1 lesser degree. So it's possible that this market can go straight up from here, okay? We're looking at it as a B wave, and we're looking for it to have another move down here first. However, if the 6,000 becomes a nice tested support, well, then we need to trade what we see, and we need to go along from that point, and it will be the mining sector that's taking it up there, and the resources are ready to move up. So if I bring across spot gold here, for instance, we've been looking for a correction down to this level here, so it's ready to move up a little bit. It's been more of a complicated sort of correction. Copper's a nice one, and we'll look at trading this today. This is copper on a daily chart. We've got this corrective pattern here. These are basically reoccurring patterns here. So we can see we've got an impulse wave up here. This correction might be an A and a B and C and come back a little bit further, but it's got a nice tested support on 7,000 here now. So we can trade the likes of copper stocks up like OZL, which we will do today. So this should break higher and take out these tops here. So we're going to see copper move higher. We've talked about iron ore this week as well, and we started off here. We've seen it, looking at this as being corrective, and looking at this moving higher through here as well, taking out this top here. It's possible to get a 5th wave in here, 5 waves in terms of wave 1 and 2 here, and 3 here and 4 here, and then down for 5 here. So that does bother me a little bit, but it's not a very nice structure to sort of work with. But because we had this impulse wave here, we went long in Rio at that point. Now we're out of Rio, but we'll just keep a bit more of an eye on this here. If this develops further into an impulse wave, well, then we'll move back into that, but it's still got potential to move up. Also, silver's the same as well. We do have a little penny stock in silver at the moment as well. Not that this wave count's that clear at this particular point, but we do have this little impulse wave to the upside here, so we'll stay with that trade for the meantime. And also crude oil too is making headway after it's finished its wave 4 correction and moving up through there, so we can expect those resources to be one of the drivers for this. But also too the banks, if we can just have a quick look at the just bringing another chart across, because the program doesn't have the banking sector in it. So this is the XXJ here, and basically we're looking for this market here this is a daily chart, to finish off its pattern here. So in finishing off its pattern here, we're looking at this down for 1 here, back for 2 here, and then a 3rd wave down here, and then a 4th and a 5th, so to come down further. So wave 1, wave 2, and then we're in wave 3 now, which will have 5 waves in it of 1 and 2 and 3 and 4, pulling back up to the 38.2% retracement level for this one here. So even though the banks are a little bit strong at the moment, rallying off their lows here, and then looking for a move down from that 7-1 sort of area here. If the 7-1 became a nice solid support here, then I'd be concerned, and I'd try and work out where I went wrong. But it does appear to be an unfinished structure down through here yet. I know when I'm looking at the likes of if I can just do a bit of a tour here, A and Z, because we're long in A and Z. When I looked at A and Z here, it's possible for this to be a daily chart here, an A wave, a B wave, and a C wave finishing here, and moving up. And we do have a bit of an impulse wave moving up here in terms of 1 and 2 and 3 and 4 and 5 here. So I'm going to stay with it. It's a high risk trade. And it could certainly collapse and just drop back down here as it meets the supply levels of resistance up here. But there's also other stocks too, like the Bank of Queensland, that are offering quite a nice scenario as well. I won't go into the big account, but even if we took from this low, this is an impulse wave. It could be an A and a B and a C wave here, and then move down from here. But I could see that this could also be counted as the corrective wave. Here's an A wave, an A, B, C for the B wave, and then 1 and 2 and 3 and 4 and 5 here. So I was going to get this one on the low here again, but I didn't want to go over it, too heavy into the banking sector while the actual sector index itself wasn't displaying the right corrective wave points as such. But we won't miss anything on this one either, because realistically it's pretty much like the XJO at the moment actually. So looking at wave 1 and 2 and 3 and 4 and 5 moving up through here. So at some point here after 5 waves, that after 5 waves we'll get a corrective wave to come into play, and that's what we need to wait for now. So we can't chase this. So we've got 5 waves here. If we get 3 waves here and get the right setup, then we can look to move in, once we've got confirmation that we're on the right structure here, and we can work around the right price and so on. So there are banks that are looking quite sort of healthy, but CBA that probably dominates the XXJ is probably still in a little rally. But yes, like I said, we've got to be mindful. When we're in a wave 4 correction here, we need to be mindful of quite a few things. We need to be mindful that this wave 4 correction, this could just be the first leg of a triangle pattern here as an A wave and a B wave and a C and a D and an E here, and then move up. Or it could be a simple A, B and C. And in simple terms here, if it's this move down through here as the A wave, to me, is in 3 waves. That's why this can just go straight up from here. So when we look at the 4-hour chart, if we go for a bit of a 2 here in a moment, so an A wave, a B wave, and a C wave here for wave 4. So if we do get support on 6,000 here, right, then we will go long in this case. But yeah, so anyway, we can see that the main thing to work out here at the moment is that we've hit these supply levels here. The resistance, supply just means sellers. So there's going to be some consolidations and some choppy price action around here. So it's not good trading. It's not going to be good trading when you arrive at a level. It's it's a bit of a sticky number in that instance here. So just on the 2-hour chart here, just another count I'm playing with, just looking at these. But with either way, we're still going to get a correction here. So when we looked at Bendigo, Bank of Queensland, then it looked like 5 waves up, and I mentioned it looks like that on the XJO as well. So if I bring the XJO across here, the actual cash market, from the low here, we can see what we can see here is we can see the strong move in the middle here. So that's like the 3rd wave here. And then this here, we could look at 1 and 2 here, and 3 here, and 4, and moving up for 5, So it does appear that we are getting a 5-wave structure in this from this low here, and this would of course look at this as an A wave, a nice simple B wave, and then 1 and 2 in here, and 3 here, and 4 here, and 5 here for this. So yeah, we're yet to see yet, but we'll play it out. It's not that we're going to we're not going to miss anything as such, okay, within all of this. But we do need to talk about it and map it out a little bit and look at all the basic counts. So looking at this 5-wave structure moving up through here would be the same as this one here on the 2-hour chart in terms of 1 and 2, and looking for this as 3 and 4 here, then 1 and 2 and 3 and 4 and 5 here. So if we go back to our normal chart that we've been looking at, the hourly chart here, last time we spoke we were looking at at the 5-9 here. We're using that number, and we're using it in terms of, well, let's go along above this one here, and if that becomes a retested resistance, we'll look on the short side and we'll go short here, and we can also keep the stops there as well. So now the market's moved up. This hitting 6,000 here on that day, I hope that you would have moved out from that particular point. So we can move these across, these ones anyway. In fact, we don't need any of these here that we were looking at before, so we don't need that one either. In fact, I'll just delete those. And you know, from the A wave to the B wave here, the target that we're actually looking at is the 61.8%, which is roughly 5,973.4 here. So that's our sort of target area there. So even though the market's moved higher, it's not the end of the world. And you know, you've always got to take in the closest, largest number, because that's what everybody will be thinking about, and that's where the orders will gather, and so on and so on. So it's quite possible that you know, it's quite possible from, I mean, all of this was a little bit messy here. There's always a bit of a problem for me. But at this situation that we've got here now, we can expect this market to stick here. We're also looking for a top in the S&P 500 as well at this point. So, yeah, look, I just don't think it's good trading here at the moment. From this little wave from here, that's... I'm just looking at another scenario here. Yeah, it's possible. So it's possible that if I take, I'd have to take this here. So that little consolidation in here, it's also possible that if I could move this across here, put this here, put this here on the wave 4 here, and have this here. So this is also possible as well. I'll just leave that there and save that. So from this low here, we've got wave 1 and 2 in here, and then 3 and 4 in here, and then 5 here. It's a little bit hard to see, so I'll just go into the tick chart here and pick that low up there. So let's just look at that. So from this low here, we've got 1 and ABC for 2 here, and then we've got the nice third wave up through here, nice long strong third wave, and a fourth wave and a fifth wave here. So the thing here is that there's a couple of things here. So I'm thinking that this is the 38.2% retracement level, so this market could just come back down to this area here. Also too is that I have to draw on this side of the tick chart here. So from the top of group, from the top of group 1 here, all the way down to this area through here, this would be the normal, working with 6,000 here, this space here of 10, 20 and 30 here, 1, 2 and 3 here, that's group 1. If we find support on top of group 1 up here, top of the 30, we need to go long from that point. But otherwise, you know, whatever happens within this space here will be all part of this number here. And it's the same on the low side here. So 65, 72 in here, and 80 here. That will be the support here for this. So this could just come down here as an A wave, a B wave, and a C wave here and stop here. If this area here becomes the retested resistance here, say the 65 or the 72 should, put the alarm bell on if that becomes a retested resistance. But generally this group here, so 65 is the retested resistance, then basically it's slipping away from this number here, and you can consider it bearish at that point. But at all of this here at the moment is that you can kind of sort of forget about the wave count in a way, because basically we're working with this number, and we have been here as well in terms of the arrival here, the reaction here, the first high above the level here. So we can just still be in a corrective mode here as well. So apart from that, I'll just put this in here. It's always good to take the length of the previous trend and just find out where the support is going to be. I was looking at it at that point here in terms of Elliott, but the Fibonacci numbers would come into this, but it still brings us into group 2 right on the 5965 area here, roughly speaking. So that's your support here. So we shouldn't go, we can't go short here as yet. And then also too, the way to go long here is to find out when this finishes here, which will probably be a bounce off the 80 here. I have to go into to find the 5 waves in here. I would need to go from 100 ticks, which we are now, down to 20 ticks. So once you've done that, then you can find that here. So you can see that if that comes into the 80 here roughly. So we can see the 50 and the 61.8% is up here. So that's really good news. So we know that this top here is really significant. Partly if it's a top, of course, but it's also the 61.8%. So we could say that if that top there becomes a nice support here, so if I just draw that here, oops, I can't draw on that side, so that's no good. So what we can say here is that if we gravitate over to 1 here, the 10 here, if that becomes the support here, if the market will move up there and it will react, and then it'll have its first high above the level, and then it'll wiggle around a bit. But if it can find support here, right, then you can go long from that point. That would be the safe trade from that point there. But just use a smaller position, then look to add on to 20, and then look to add on to 30. So the correction at 30 will be a bigger correction than it will be at 20. That's on the upside here, and on the downside here. As I mentioned, if group 2 here becomes the resistance here, then short from that point. The other point here too is that we can look at this here as wave 1 down to this point here, and then wave 2 coming back to this point here, and it does appear to be a wave 3 in here. The reason it's looking to be a wave 3 in here is because of the speed it's moving. Yes, it's on the close of US markets and so on, but we need to look at it as, if it's going to move down, then 1 and 2, and this will be the group 2 area here where the 61.8% is, will be your wave 4 in here, and then the wave 5 will come down here. There will definitely be a bounce off 50 here. But the thing here, if you do get that 5 waves here, then the thing is that we're going to get an A wave, a B wave, and a C wave back up. So then this low down here, wherever it may be, come into play here, will be the trigger to go short again. So if I can take all of this here, let's just say that we move down in 5 waves here. That's those 5 waves down to the 50 area here. Then there's going to be an A and a B and a C coming back up to here. Because we've got 5 waves here, 5 waves here, 5 waves here, then we will get a 3-wave counter trend, and then we'll get another 5 waves down. So normally I say just go low on these ones here, but you can also go onto that there as well, those 2 lows there, the breach here, and that will be a support here, and then it will become resistance here as well. But also too, if you can count these up, that will be the 50-60% area here. So you could pretty much just go in and short it at that area there. But you could also refine it further as well, because this last leg here will have 5 waves in it. So if you can count to the top of the 5th, then you can look to short there as well. So there's no right or wrong way. The right way is knowing what you're doing. So if you know what you're doing, then that's the right way, isn't it? So if you don't know what you're doing, then you need to look for the safe way to do things until you know how to do things. And sometimes even when you know how to do things, things in the market aren't always clear as well. So that can be tricky as well. So yeah, so I do see the resources being bullish. The banks are bullish at the moment, but they can pull back. Yeah, and also this kind of behaviour up at 6,000 here is bullish basically. Even though it's correcting from these numbers because there'll be sellers there and so on. It's still a bullish. Because it's tackling it. It's aggressive. It's bullish. So I do see it as bullish. So the counts that we've had for a bullish market as such, either this one here on the 2-hour chart where we've got a top in play here to come in, or the 4-hour chart where we've still got a smaller correction at the 6,000 here, then a move up here as well, is still on the cards here. So we need to trade what we see. All I'm pointing out today is that there's not a lot that's going to be going on in here, but if we do get the 5 waves down, then that will give us a short trade on that. Okay, so okay, I don't need to talk about it any further at that point. So it's just not a clear wave count, so we're just going to use the intraday and also this number here as well. Alrighty, cheers.